Traders, welcome back to another price session trading lesson, and let's dive into today's session because based on the candlesticks on the chart, I can see that the today's session is a slight bearish bias because you have a spike. They later on transform into a channel, so this is a spike and a channel pattern, and there's a reason to price movement. So for this reason, I'm always trying to identify the proper channel because these candles, they are following a pattern. There are small channels or even big channels present on the chart, and according to trendline rule, because we're closing outside, I expect for sellers to retest the lowest low to create new extreme. However, I just cannot sell anywhere randomly on a chart. I want to take a high probability setup at the key entry point, which right now we are correcting to the EMA. I'm going to come from this low because I'm counting for a second entry short. We have a new low, first break below pullback, second entry short. We're at the key entry point, bias is bearish. Can I sell? I cannot. Notice because we also have a shortened uptrend in play. There's a trend line rule being applied even for the corrections against the main trend. So I have to wait. Even though it worked for a scalp, I'm not really interested. And notice prices eventually created a break and a new extreme. So new high was formed by the bulls, indicating to me that the bullish momentum played out. And now I'm safe to start looking to sell. And notice this is technically double trap, but this is also visual second entry short on a larger frame. You have a new low, kind of like a first entry short, pullback, second entry short. You can draw the leg, first leg up, pullback, second leg up. So there's a two-legged pullback, uptrend played out with the break new extreme. We expect new extreme for the sellers to make. And also notice the previous support is right now acting as resistance, showing signs of selling pressure. So there's a breakout, pullback pattern, larger two-legged pullback, great first high probability setup for the day, and market created new extreme, which means I'm pausing my short setups because the downtrend played out, and I'm just going to observe what the market is going to do because we can have correction or even possibly reversal. Okay, you can see that the prices are stalling a little bit. This is where the stock market is opening, 8:30 Central Standard Time, and we are strongly reversing to the upside. If you were focusing on a larger downtrend like this, by the time you have such a strong bullish retracement, you have to adapt because we have so few bars on the chart. The structure is still slow, so this is not a strong downtrend. Most likely some form of a trend range. Either way, I'm going to redraw a brand new short and uptrend. Okay, we have a break, new extreme. And prices are strongly reversing back below the exponential moving average. So we have a break new high indicating to me that this uptrend played out. And now we have a lower high. But this lower high is not really confirming much. A lower high is supposed to be a confirmation setup, but this lower high is not confirming much. And also when I was watching this live, I redrew my trend line also from the lowest point, so I had it a little bit wider, and only now I was thinking about making it tighter. Why? Because we have low amount of bars on the chart, and once we see a low amount of bars on the chart without a clear bias, it's most likely some form of a trend range, but I wasn't quick to adapt. Now this lower high is such a great tier 1 signal bar that if you're playing a break new high, you can consider taking this as a more aggressive setup just because it's not really confirming much. It's based on the overall context and how well you can read a price action that we are most likely going to continue working lower because it's a great signal bar, closing right below EMA, but it's not confirming much, so I'm not really going to mark it as easy high probability setup. It's more aggressive, and you can see EMA is starting to completely flatten. So the downtrend has transformed right now into a consolidation phase. EMA flattening, you have swing down, swing up, swing down. So I'm going to identify instantly my support and my resistance. We have a break, goes outside. Can I take a failed second entry long, new high, first entry long, pullback, second entry long, failure? I cannot. This is an inside bar of this bullish bar, and you have pushed so far down already. It's too late for first second entry long. Plus, you didn't even trigger above this bullish bar, and it is an inside bar. So all of these negative factors are really against this failed second entry long. You would need to have second entry short below EMA, but it never formed. Okay, and right now you can see we are in the middle of this trend range, so I'm gotta be careful here. I don't really want to be taking setups in the middle like this when it's this choppy and this stacked. Okay, we have a break and a new extreme. So this downtrend just reached a new extreme, which means according to trendline rule, and we're also very close to the bottom trend range, I'm going to pause looking to sell. And you can see EMA getting into these bars, so this is a danger zone. I can't really trade here. I'm going to redraw my short and uptrend. Okay, we're bouncing at the highs. This is a good sign for the sellers. Okay, can we get a failed second entry long? And we can't even get a failed second entry long. This is how the key levels are reacting. And at this point, you can see that the key levels are really generating a pivot instantly almost. It is a very tight trend range and healthy trend range. So according to range rules, you want to buy low, sell high. You have a closeout tight, attempt to create a new extreme. But we don't really get a good setup. You can't really go long here because there is no trigger, because it formed, the next bar was inside bar and market is reversing back up. So I'm going to redraw a short-term uptrend. So you can see I'm going to move my support a little bit higher. At this point, very tight trend range, just following these tight channels. And I'm looking for opportunity to buy low, sell high. So far, not that many chances for me. Okay. I actually can see that we have a micro break and a new extreme for the uptrend. Okay, and we are finally confirming the resistance again. One top, double top, triple top, indicating to me that sellers are in the market and I want to sell high. So let's see if we can get some nice setup. Can we get a lower high? Okay, we have a lower high here, confirmation of the triple top, but notice how big this bar is, right into EMA. It's also part of this stacked area of this congestion. I would prefer to have a failed second entry long since it's this stacked. You can get a failed second entry long. By the time we have a failed second entry long, notice it pushed above EMA and my signal bar is not that great. I notice some trader had a nice bearish bar. If you have a strong bearish bar here for failed second entry long, you can definitely consider taking. But this is what you're looking for. You're playing a tight trend range, so you have a range rule. Buy low, sell high. You have triple top, so you're looking for a lower high or a failed second entry long. And notice we're breaking below EMA. We're most likely heading all the way down to the support. And prices stick one thing higher, reverse down. And this lower high is now confirming the failed second entry long. Great tier 1 signal bar. Decent high probability setup. Confirmation of the failed second entry long, and you're coming off the highs of the resistance, most likely all the way to the bottom. I cannot really leave any price movement on the chart without a channel because I want to follow the trend line rule correctly. We have a break, new extreme, and according to trend range rules, most breakouts will fail. We have a closeout tight. Can we fade the breakout here? No, because the downtrend is in play. Only after there's a break and a new extreme. This is where buyers can start even thinking possibly that the breakout may fail and we may expect stronger bullish momentum. Okay, but since I have no good signal bar, looks like a one steep move down, I would prefer to get reversal pattern above EMA, even though it worked. Can we get a failed second entry short? You have a new low, first entry short, pullback, second entry short, failure. If you trigger above this bar high, if you don't trigger above this bar high, there's not going to be a failure. Well, it did trigger, so this is a failed second entry short. But the signal bar on my chart is bearish bar. So unfortunately, we didn't really get a good bar. But the reason why I'm looking for failed second entry short and not really for second entry short, number one, we already have a break new low. And number two, this was a healthy tight trend range. So my bias is more bullish because we just have a failed breakout and we expect for prices to go back into a trend range. So I would need to have a proven downtrend, stronger downtrend for me to expect prices to continue working lower. And since this was such a long and sideways trend range, I'm leaning more bullish. For this reason, I'm looking for failed second entry short, preferably above EMA, but the signal bar was bearish. Okay, we're breaking lower. At this point, EMA is not holding, so it's not looking good for bulls. But at the same time, I can't really sell. You're kind of in the middle of no man's land. You're just hovering around this support. So this uptrend needs to get new high, but at the same time, EMA wasn't holding. So too much conflicting patterns here. I'm going to be waiting here. Okay, I can see the EMA completely flattening. I'm going to redraw a small trend range. You can see up, down, basically indicating a small trend range. But you are making lower highs. You cannot deny the fact that the prices are really struggling to break back into the trend range. You're hovering at the bottom of the trend range, so this is giving you signs that the structure is a little bit more bearish. Okay, this is very tight. I don't really like taking any setup in this tight trend range. And notice new low, first entry short, pullback, second entry short. Uptrend played out with the break in new extreme. This is a larger tool like a pullback, and even this first uptrend reached new extreme. So all uptrends on the chart created new high. According to trend range rules, most breakouts will fail. And this right here is a smaller version of a trend range, healthy trend range. So this is a failed breakout in addition first entry short, pullback, second entry short. So second entry short, NFL breakout, great tier 1 signal bar, closing on its very low, great high probability setup, and look at it go all the way down to the lows. So this is how you trade trailing ranges. You fade the breakouts, especially if the structure is more bearish, because if I'm going to zoom back, you can see that every single major high is just lower and lower in general. So this was quite unexpected. You don't know this is going to happen, but it generated a very strong bearish momentum. Okay, prices are correcting lower and we're pushing all the way down. Okay, and at this point it's quite hard to exactly analyze what is the overall structure, because you can see it's definitely bearish. We keep trending lower, but there was a long sideways trend range here, some trend range here, and this is now too steep, so you can't really expect for prices to continue working lower. There's a chance for me to draw downtrend like this, which is the best alternative now, because we keep pushing lower, and notice it fits nice at the bottom. So this is a nicely fitting downtrend, because we have at the end of the day a bearish downtrend right now, but this was a long trend range, so not as visible at first, but this just helped me to understand it. I'm not really looking to go long just yet. At the same time, I have to be careful selling, because we're bouncing off the trend channel line, and this was push phase all the way down. So this is where the correction phase may start, and I have to be careful, because since we are bouncing off the trend channel line, the stronger bullish correction may follow. So I definitely cannot be too aggressive when I'm looking to sell. I want to let the bullish correction play out, which means I'm going to follow the trend line rule. I'm going to redraw the uptrend. As long as this uptrend is in play, I expect it to create new extreme. Okay, we have a new extreme for the uptrend. Great. So only now I can possibly start thinking about another sell setup. But once again, EMA flattening, bars are stacked right next to each other. We're above EMA. So I would definitely need to see push below EMA to confirm the bearish momentum, that I can at least start looking for some sell setups. But first, before I'm going to do that, I'm going to redraw the shortened trading range, because this is once again getting very congested. Okay, you have a breakout pullback lower high, but not fully at the EMA with the body, not the great bar, a little bit stacked here. Not really a fan of this. Okay, I have a new low, first entry short, second entry short, but now you're breaking back above the EMA. But more importantly, I have shortened uptrend in play, so I can't really sell because the shortened uptrend is in play. And notice how sideways it's getting, unclear bias. You want to be selling preferably high, not really chasing it all the way down here once the correction phase is starting, because the push phase has ended. Notice in every single trend, you have a push phase, bouncing trend channel line, correction phase. At the trend line key entry point, the push phase will be generated. Push phase, correction phase, push phase. So now we expect for prices to have a stronger correction phase, because we are coming off the trend channel line. That's just how price action works. So something for you to keep in mind, to be cognizant of the scenario when the prices are bouncing off the trend channel line. Okay, prices are trending higher. Give a small break, new extreme, great. And we are at the top of the trend range. So I want to see some nice bearish bar or lower high. We have potential failed breakout here, but signal bar was bullish. You would have to enter this double bar entry, and it's not that clean. Can we get some lower high at this resistance, something like here or here? Okay, we cannot. By the time we get lower high, notice it is too far down, directly into the support. I can't really sell here. My goal, remember, is to sell high, because I'm trading a tight trend range consolidation. And we have a new high, first entry long, pullback, second entry long, failure. This is a second entry long failure, and this time you're quite close to these highs. So this is a good sign, because you have some room to scalp before these lows. It's just still quite stacked. Once again, I can market more aggressive. It's not textbook setup that you would like, but at this point, as a failed second entry long, you're touching somewhat of this resistance, and the overall bias is bearish, so you're definitely being more bearish. Good enough for a scalp. Okay, prices are trending higher. We have a possibly failed breakout. Can I take this failed breakout? I cannot, because we already have a larger two-legged pullback. This uptrend played out with the break new extreme. We didn't break this trend range, and I have shortened uptrend in play. So chances are now that we may finally reach the trend line. Larger two-legged pullback, didn't break the trend range, massive bullish push. So I expect for prices to create new extreme, even though it worked for a scalp. Not really a great setup. There's an attempt for new extreme, okay. And both are failing to break the double top. And prices are strongly breaking below EMA. Okay, so at this point, what am I expecting? I have micro double top. We're breaking below EMA. Overall bias is bearish. Lower high would be good setup, confirming the failed second entry long. Or I can use this low and treat it as a first entry short, pullback, second entry short. Lower high confirming it. But notice how lower high formed on my chart. Doji bar. And the reason why I like selling lower high here, or even thinking about this, because once again, notice the similarity in all of these patterns here. You're selling lower high or failed second entry long at the top of the resistance, at the top of the correction phase. Same thing right here. And right now, notice we have a spike, trend range, and you're selling right now high. You're selling once you let the correction play out. So chances are high that the price is going to create a brand new push phase. So you have odds on your side here. You're not fully at the key entry point. That is okay. You're already pushing below EMA. You have micro double top. So there is not enough momentum. You can see how sideways the corrections are. So the corrections are not as strong. But the lower high on my chart just didn't form that well. Doji. If I had better bar here, I can definitely sell here. But since my bar was so doji, I can't really sell. And notice what a great runner you would have been able to catch. Right all the way down here. Okay, prices are reversing. Okay. Okay, and prices, okay. And prices are not even pulling back. So at this point, this is definitely a strong bullish trend, but I am still leaning for prices coming back and testing the low. But notice what is happening. We keep completely ignoring any bearish channel, and we are straight rallying up higher without even confirmation of the EMA. And once prices have already retraced so much of the initial downtrend, I have to adapt. Notice how far you're basically almost at the very beginning of the downtrend. So this is a brand new structure to me. We retraced almost 70%, 80%. So once I retrace so much of this downtrend, I have to adapt. This is extremely strong bullish trend, not a single touch of the EMA. So I definitely right now am treating this as a bullish trend, and I have clearly confirmed channel. I'm looking for long setups. Okay, so I'm no longer expecting for prices to create new low once you retraced so much of the initial downtrend. If you have that 50%, 60% retracement mark, that's when you can still expect possible new extreme. But over that 50%, over 60%, you have to adapt now. You can use Fibonacci retracement tool to check the measurement, and prices are correct. You have micro double top, prices are correcting lower. You have a first entry long. I'm going to redraw the downtrend. Okay, because we have micro double top, so we have a first entry long, counts reset. We have a second entry long, but the signal bar is bearish, and not only that, the downtrend is in play. So we have follow-up bar, bullish bar, so potential double bar entry makes sense. But still, the downtrend is in play, so I don't really want to be too greedy. This was a little bit too steep, too parabolic. I would like to see stronger correction. If I have a clear break and new extreme, I can think about buying, but this downtrend is still in play. I don't want to take it. Okay, we have here possible double trap, but still I can't take it because it is doji below EMA. Double trap has to close above EMA, so I can't really take it. EMA is going sideways, congestion is forming, and now we have failed breakout. There's a failed breakout out of this congestion, downtrend played out with the break and a new extreme. You're closing above EMA, and this is a great failed breakout because you expect for prices to retest the new extreme according to trendline rule. This is a brand new trend right now. The bias is bullish. You have a congestion. You can see EMA completely flattened, overlapping bars, downtrend played out with the break. New extreme finally, and this is a great signal bar. You would be expecting high low for second entry short, but it never formed, and now it's too late. Always try to sell at the top of the trend range where the correction phase will end, and be careful when you are trading a weak downtrend, because this is a weaker downtrend, broad wide downtrend where you have a long correction, long trend ranges. So you have to be careful selling right after you're bouncing off the trend line because a brand new correction phase may follow. And once you retrace over 70% of the initial downtrend. You have to adapt. This is a brand new trend and you expect for prices to create new high and you're looking for high probability setups to go long. So not that many setups, but I hope you had a decent trading day. I'm going to talk to you next time. Take care, everybody.